All right, indeed, it is time for our market update. We do that with the team at Property Brokers, and of course the GM of Rural at Property Brokers is Conrad Wilkshire. He's with us on the line now. Conrad, good morning.
Morning to you, Dom.
So, I imagine at the moment, correct me if I'm wrong, but I would say that you're pretty busy at the moment because that spring campaign is underway. She's in full swing.
Yeah, all hands on deck at the moment, Dom. In the order of about 560 million under campaign, in excess of 110 listings in the run-up to Christmas. So, yeah, no, it's all hands on deck.
Good stuff. Now, tell me about what you're noticing in the market generally.
Well, obviously, we get a perspective of what's going on from the business activities we're doing. But it is really interesting when you start to have a look at the market, all farm sales, say, above 20 hectares. If you look at it on a rolling 12-month average, in other words, you take 12 months to September, the 12 months to November, and you have a look at that, it's still very positive compared to, say, 12 months ago. It's 3.5 billion market. It's about 1.3 billion up on the same time last year as a market on a rolling 12 months. The only problem with the 12-month average, it doesn't give you much of a feel for what's going on right now. At the beginning of a new season, everybody wants to know what's happening now. It's all very well looking back, but they're making decisions on next season and their business models. So when you do that, it starts to show a very different pattern. And I was quite surprised with this, but if I go back to July and just look at the national monthly sales across all farms above 20 hectares, from July to October, we are looking at total sales for that 4-month period. So it's July right through to the end of October off the Ryan's data. It's about two-thirds of the same time last year, about 247 sales versus 381 last year. I was really surprised by that.
Yeah.
And in fact, if you look at spring, it's really September and October. Well, we're about 194, just under a couple of hundred sales for September and October last year across the country. That's the whole market. And, it's about just over 120 sales for this time last year. And so if I have a look at October, you're sort of looking at the difference between 62 sales for the month of October versus 108 same time last year. And so it's surprising because if you look at all the underlying market signals for our primary sector, is extremely strong.
Yeah, you would have thought that it would be almost flipped around the other way, but that's not what the numbers are telling us, Conrad. So if you sit back, in light of what you've just told us then, where do you see the best value for money at the moment?
It's got to be our dairy sector. Dairy's still holding up in a relative sense. It's about 15% of sales this year and last year, if we take October. And obviously the main selling period is going to be this November, December, and the run-up to Christmas. So the November data is going to be very interesting. But if you stand back from all of that, our dairy farms, and particularly what I call their Tier 1 dairy properties, I think it represents outstanding value on an adjusted risk-return basis. And if you look at the market and how it's operating, you're seeing big money paid. There's no such thing now as cheap land. It's with the advent of alternative land uses and what have you, you're seeing significant increases in value across the board. But if you look at return and a mature sector with a really good business model with vertically integrated, it really staggers me that we haven't seen a real ramping in the interest to acquire dairy properties. We are seeing, we've definitely now we're selling dairy properties this week, and we are getting good interest. But I would have thought we would see a much higher volume of sales than we are currently across the market as a whole, and I believe that will happen. I think it might be an element of just standing back from the market at the moment and people making assessments. But if you look at all the market signals for this season for our dairy sector, the free trade agreement with the UK, the forecast payout, you look at the futures price for milk fat, milk solids, which they've shown 30 years, the industry. And then actually looking back at all that, I just keep coming back to there's got to be a value. And it was last year, by the way. Last year we were saying the same, and we saw a number of people take advantage on that sort of tier 2, tier 3 dairy sector. I think they bought extremely well. And you could understand maybe people stepping back from the high value dairy properties on a way to money type issue. But I just, if you're looking at strength and return, proven business models, I'd argue on the current payout outlook, it's really makes a solid case on its own right.
Yeah, I think you might be right there, heading for a something around a $9 payout for the season. So that is encouraging. And as always, Conrad Wilkshire from Property Brokers. Good market insight. Appreciate that. I think you've raised some very good points and given people a lot to think about out there. So appreciate your time, and we'll talk again shortly.
Yeah, a lot happening before Christmas. Looking forward to doing the update shortly.